Welcome back to the My Latin Life podcast. Since 2014, My Latin Life has been your trusted guide to traveling and living in Latin America. Today's episode is a little bit different. It's going to be an episode about the Paraguay investor path. If you're curious about Paraguay residency, territorial tax residency, Plan B, low fiscal presence residencies around the world, this episode is for you. We're going to be breaking down everything you need to know about Paraguay's investor visa. This is a brand new program. It just launched. This is like the golden visa or investor visa for Paraguay. It's called the Investor Pass, and I hope you enjoy this conversation.
Imagine opening a high-yield savings account that pays out a double-digit annualized return.
Which is already crazy.
Right, but then as a structural byproduct of just holding that account, the foreign government where the bank is located just issues permanent residency for your entire family.
Yeah, it sounds completely made up.
It really does. On the surface, it sounds like one of those highly targeted late-night internet scams, But based on the stack of policy documents and the financial analysis we're unpacking today, as of early 2026, this is actually a formalized matter of national policy in Paraguay.
It's totally real.
Yeah, so welcome to today's deep dive. Our mission here is to analyze exactly how Paraguay's newly launched 2026 fast-track investor visa is just, completely short-circuiting the traditional global immigration system.
It really is.
You want to look under the hood of this policy change, examine the macroeconomic forces driving it, and figure out if the math actually holds up to scrutiny for you.
I mean, it is such a fascinating policy pivot to examine. What we're seeing in these sources is a government fundamentally redefining how it attracts foreign direct investment.
Right.
They're treating permanent residency less as this, gradual process of cultural assimilation and much more like a premium financial asset class.
Yeah.
It's a highly engineered system that just perfectly blends geopolitical mobility with emerging market finance.
Because usually, securing a Plan B residency in another country is basically an endurance sport.
Oh, absolutely.
You're out there proving your worth to a foreign government, renting local apartments to prove you actually live there, setting up local utility bills, and just waiting years in this giant bureaucratic holding pattern.
Yeah.
Like waiting at the DMV for a decade.
Yeah, exactly. The traditional slog.
But looking at our sources, this new policy essentially builds a VIP bypass lane for foreign capital. You get the right ticket, you get the fast path.
That's a great way to put it.
So before we analyze the specific price tags and the investment tiers, let's understand the actual legal mechanism that flipped this switch just a short time ago. What exactly changed in the law?
Right. So the structural catalyst outlined in the source is this specific legal mechanism that was triggered on April 21st, 2026.
Okay.
On that date, the Paraguayan government issued Resolution N-Degrees 0283.
Resolution 0283.
Yeah. And this resolution created a new legal instrument called the Constancia de Inversionista Extranjero.
Which translates to?
The Foreign Investor Certificate. We'll just call it the CIE for short.
Okay, CIE. So from a purely legal perspective, how does one single new certificate rewrite the entire immigration framework? Because, Paraguay already had an immigration law on the books, right?
Sure did, yeah.
Law 6934 from 2022, which dictated how foreigners move there. So how does the CIE change that?
Well, under that standard 2022 framework, the system operated sequentially. Any foreigner wanting to relocate to Paraguay had to start as a temporary resident. You'd submit your application, wait for processing, establish a life there for a couple of years, and eventually, maybe, you graduate to permanent status.
Normal way.
Right. But the CIE certificate fundamentally rewires that entire sequence. If you hold this formalized investor certificate, the government legally waives the temporary probationary phase entirely.
Wow. Just entirely skips it.
Exactly. You substitute financial proof for social proof.
Yeah.
With the CIE, you literally go straight to permanent residency on day one.
And the source notes the timeline for that approval is as little as 5 business days.
Yeah, 5 days.
I have to admit, when I first read that detail, I did a double take. 5 days? Most governments can't even renew a standard passport in 5 days. I've waited longer for my local municipal government to issue a permit to build a fence in my backyard.
It's wild.
How is a national government clearing international background checks, running security protocols, and issuing permanent status in a single work week?
It sounds super counterintuitive, but that speed is a deliberate engineered feature of the program. By mandating that the investment must be routed through authorized, highly regulated Paraguayan banks, the government is essentially front-loading the due diligence.
Oh, I see.
Yeah, the banks are required to perform exhaustive anti-money laundering and know your customer checks before they even accept the funds.
So the banks do the heavy lifting.
Exactly. So by the time the application reaches the Migration Directorate, they aren't starting from scratch at all. They're looking at an already vetted, financially secure profile.
That's smart.
Right. The 5-day turnaround is designed explicitly to attract global capital from investors who, place a massive premium on bureaucratic efficiency.
That makes a ton of sense. They're outsourcing the background checks to the financial compliance sector.
Yep.
And that extreme efficiency extends to the maintenance of the visa, too, which is arguably the most radical part of this entire policy.
Oh, the physical presence requirement.
Yeah. To keep this permanent residency active, the legal requirement is 1 single day of physical presence every 3 years.
It's almost nothing.
You could theoretically fly into Asuncion on a Monday morning, grab some lunch, clear customs, and fly out by the afternoon.
Literally, yeah.
It just completely severs the traditional link between having residency and, actually residing there. So let's look at the barrier to entry. If the door is open that wide, what exactly is the required capital to walk through it? What's the price of admission?
Okay, so the source material breaks down a very specific 4-tier menu of investment options. And the economic mechanisms behind each tier are, they're quite different.
Let's hear them.
The lowest barrier to entry is the productive business investment route. The minimum capital required here is $70,000.
Which honestly, in the broader landscape of global investment visas, where programs in Europe or the Caribbean often demand $500,000 or more, is a remarkably low floor.
It really is a low floor, but the mechanism requires active participation.
Okay, what does that mean?
It's designed for an investor who intends to establish or buy into a real operating commercial company within Paraguay. You're expected to generate local economic activity, create jobs, manage overhead, all that stuff.
Gotcha. So you actually have to run a business.
Right. Then the second tier scales up the capital requirement to a $150,000 minimum. And this one is highly targeted.
Targeted how?
It's earmarked specifically for the tourism sector. So think eco-lodges, hotels, regional hospitality infrastructure, that kind of thing.
Which makes perfect sense from a macroeconomic development strategy. You've got an emerging market trying to build out its international tourism capacity, and they're just leveraging foreign capital to subsidize that infrastructure growth.
Exactly.
Okay, so what are the final 2 options?
The final 2 routes both sit at a higher $200,000 minimum. The third option is traditional real estate, requiring a $200,000 minimum investment in titled property.
Okay, makes sense.
And finally, the fourth route, which our source highlights as the overwhelmingly popular choice right now, is the financial instruments route.
And what does that involve?
This involves investing a minimum of $200,000 directly into Paraguayan government bonds or fixed-term certificates of deposit, locally referred to as CDAs.
Okay, I want to pause and push back on this for a second.
Yeah.
Because this is where the logic seems to completely break down if you just glance at the top line numbers.
Right.
Look at those options. You can secure this permanent residency by starting a business for $70,000.
Right.
But the source explicitly points out that most investors are voluntarily choosing the $200,000 financial route instead. That seems entirely counterintuitive. Why tie up more than double the capital if you don't actually have to?
It's a really sharp observation, and honestly, it cuts to the core of why this program is gaining so much traction.
Okay, why?
Investors are not viewing that $200,000 as a sunk cost or a fee or an expense. They're looking at the underlying yield. The $70,000 business route requires active management, local knowledge, operational risk, daily oversight, but the $200,000 financial route is completely passive.
Right, you just park the money.
Exactly. But more importantly, the returns being generated by those passive instruments are currently staggering.
Let's dig deeply into those returns then, because this really seems to be the economic engine of the whole proposition.
It absolutely is.
The source details that in 2026, Paraguayan government bonds are yielding between 11% and 12% annually in U.S. dollars. And the fixed-term deposits, the CDAs, are sitting around 9.5%.
Yeah, those numbers are wild.
Right. Now, for anyone accustomed to U.S. Treasury yields or European bond markets, seeing 11 to 12% on a government bond immediately triggers alarm bells.
Oh, for sure.
Historically, double-digit yields often imply junk bond status or like a massive risk of sovereign default. How is Paraguay able to offer those kinds of numbers? What's the actual mechanism supporting that yield?
To understand the yield, we have to look closely at Paraguay's specific real economy.
Okay.
Paraguay is a massive global exporter of agricultural commodities, specifically soy and beef. But structurally, their most important asset is the Itaipu Dam, which they share with Brazil.
The hydroelectric dam.
Right. This makes Paraguay one of the world's largest exporters of clean hydroelectric power. These exports provide the country with a relatively solid, consistent stream of foreign dollar reserves.
Which gives them stability.
Exactly. It gives them a level of macroeconomic stability that some of their South American neighbors frankly lack.
But they are still an emerging market, right?
Precisely. They lack the deep, highly liquid domestic capital markets of a developed Western nation. So, to attract foreign capital away from perceived safe havens like New York or London, they have to offer a substantial premium.
So the high interest is a lure.
Yeah, that 11 to 12% yield is essentially the risk premium the Paraguayan government pays to convince global retail capital to park in Asunción.
Okay, that explains the mechanism behind the sovereign bond yields. But the source also mentions the CDA option, yielding around 9.5%.
Yeah, the local bank deposits.
Right. For anyone who hasn't banked internationally in Latin America, how does a Paraguayan CDA differ mechanically from a standard certificate of deposit you might open at your local neighborhood bank?
Mechanically, the structure is identical. You agree to lock your money in a local Paraguayan bank for a fixed term, maybe 3 to 5 years, in exchange for a guaranteed interest rate.
Okay.
The difference is the banking environment. Paraguayan banks utilize that deposited capital to fund high-growth local domestic lending.
So they're lending it back out.
Exactly. They're issuing mortgages, agricultural equipment loans, commercial credit, which carry very high interest rates locally in an emerging market.
I see.
So the bank can easily afford to pay the foreign investor a 9.5% yield because they're turning around and lending that same capital out to local farmers or developers at 15% or 20%. It's just standard banking arbitrage.
That's banking 101, just scaled to the yield curve of an emerging market.
Totally.
But the source introduces another macroeconomic variable that pushes the effective returns even higher. And this is where the financial engineering gets genuinely fascinating, the currency dynamic.
Yes, the Paraguayan guarani. The source data illustrates that the guarani has experienced periods of significant appreciation, sometimes 20% or more against the U.S. dollar in recent years.
Wow, 20%?
Yeah. This creates a highly lucrative scenario for a foreign investor. If you convert your U.S. dollars into guarani to purchase these high-yield domestic instruments, and then the local currency strengthens against the dollar while you hold the asset,
your return goes up.
Exactly. Your total return is the interest rate yield plus the currency appreciation.
It's a classic carry trade.
Yes, exactly.
For anyone unfamiliar with the term, a carry trade is when you borrow or use capital from a low-yield environment like the U.S. dollar and invest it in an asset, providing a higher rate of return in a different currency. You're capturing the yield spread.
Spot on. You're leveraging the relative stability of a hard currency against the high yield and growth potential of an emerging market currency.
And the numbers stack up.
They really do. When you compound a 9 to 12% base yield with a strengthening local currency, the source notes that investors are regularly seeing effective total returns well above 15% annualized.
So, wrapping our heads around the math.
Yeah.
It completely reframes the initial $200,000 requirement.
Right.
You aren't spending $200,000 to buy a visa. It's essentially an actively working, high-yield savings account that just happens to throw in a permanent residency card as a free bonus.
That is the exact paradigm shift the source is highlighting.
But let's take a step back from the macroeconomics for a second. High yields look incredible on a spreadsheet.
Sure.
But if we consider the actual practical utility of this program as a Plan B residency, what does that mean for you? Like if a crisis occurs in your home country and you actually need to activate this backup plan, how functional is Paraguay for an incoming family?
Well, the source outlines several structural and lifestyle advantages. As a permanent resident, you gain near parity with actual citizens in terms of economic rights.
What kind of rights?
You have the absolute right to live there full-time. You can work locally without needing secondary permits. You can own titled property outright without foreign restrictions, and you integrate fully into the local banking system.
That's pretty comprehensive.
It is. Furthermore, Paraguay operates on a territorial tax system.
Meaning the government only taxes income that is actively generated inside Paraguay's borders, correct?
That's correct. If you're a digital nomad, a remote worker, or an investor earning income from clients or investments outside of the country, Paraguay does not tax that foreign-sourced income.
Wow.
Yeah, that is a massive structural draw for global citizens. But perhaps the most compelling logistical detail from the source concerns how the program handles dependence.
Right, because traditionally, global immigration programs scale their costs heavily based on family size. It might be an extra $50,000 to add a spouse and $20,000 per child.
Exactly, but the Paraguayan structure is completely flat in this regard. Yeah. The source notes that spouses and dependent children are included in the primary applicant's residency file without increasing the initial $200,000 investment minimum.
So if you include a spouse and a couple of kids without bumping up that $200K minimum, the cost per person plummets.
Yes, drastically.
It becomes an incredibly efficient family safety net. You're securing permanent geopolitical mobility for 4 people on a single yield-bearing capital commitment. It's highly efficient.
Very efficient. Yeah. And the source also mentions a long-term play regarding citizenship.
Oh, right.
Maintaining the permanent residency for 3 years triggers the legal eligibility to apply for full Paraguayan citizenship and a second passport. And importantly, Paraguay explicitly permits dual citizenship.
So there's no legal requirement to renounce your original home nationality.
No.
So the end goal is clear. But I want to look closely at the actual friction of getting there, the logistics. The source breaks down the specific bureaucratic steps required. You choose your route, you use an authorized bank to clear the compliance checks, and then there's a specific list of required legal documents.
Right, paperwork.
Some of this sounds like standard global bureaucracy, a valid passport, a clean police background check from your home country, but they specifically emphasize the need for an apostilled birth certificate.
The apostille, yes.
For anyone who hasn't navigated cross-border legalities, what exactly is the mechanism of an apostille? Why does a foreign government care if a document has one?
An apostille is essentially an international mechanism for notarization established by the 1961 Hague Convention.
Okay.
Since a Paraguayan immigration officer sitting in Asuncion has no practical way of verifying if a birth certificate issued by a small county hospital in Ohio or municipal office in London is actually authentic, the apostille acts as a legally binding certification from the issuing national government.
So it's proof it's real.
It verifies the document's authenticity under an international treaty. You can think of it as the cryptographic signature of the paper world. Without that specific apostille stamp, your foreign documents have absolutely no legal weight or validity inside Paraguay.
Got it. So you compile these internationally authenticated documents, secure the financial investment, and then you hire a licensed Paraguayan attorney to compile and submit the file.
Exactly.
The source lists the total setup costs, which encompass the legal fees, the official translations, the apostille services, and the government filing charges as running between $3,000 and $8,000.
Which is very reasonable.
Yeah, which, when compared to other global residency-by-investment programs that often mandate tens of thousands of dollars in non-refundable government processing fees, represents a relatively low administrative barrier.
It is a very competitive administrative structure, and once that fully authenticated, legally compliant file hits the Migration Directorate, that is when the 5-business-day processing window activates.
Okay, we need to tap the brakes and inject a serious dose of reality here. We're analyzing a program offering 15% effective returns, territorial tax advantages, 5-day processing, 0 extra capital requirements for family members, and a 3-year path to a second passport. It sounds almost suspiciously perfect.
It does sound like a flawless geopolitical arbitrage.
Exactly. But financial markets do not offer free lunches. Before you go wiring your life savings to Asuncion, we have to look at the structural risks outlined in the text. What is the actual catch?
Well, the source is very direct and transparent about the constraints and realities on the ground. The most immediate structural catch is liquidity.
Tying up the money.
Yes. The program dictates that the investment must be strictly maintained for the entire duration of the residency.
So no early withdrawals.
Right. You cannot park $200,000 in a CDA, wait for the ink to dry on your residency card on day 5, and then immediately liquidate the account and wire the funds back home.
That makes sense.
The residency is inextricably tied to the presence of the capital. If you pull the funds early, the residency is legally revoked.
So you are genuinely locking up that capital. You lose access to that liquidity. That is a serious commitment of resources.
Absolutely. The second major reality check concerns the physical environment itself.
the country of Paraguay.
Right. While Paraguay is politically and economically stable, especially when benchmarked against volatile neighboring economies like Argentina or Bolivia, it remains firmly an emerging market.
It's not Switzerland.
No, it's not. The source explicitly notes that while the capital city of Asuncion offers modern amenities, private healthcare, and reliable services, the infrastructure outside of those open centers, the roads, the power grids, the utilities, can be quite basic.
Right.
If your plan B involves actually moving there with your family, you have to be prepared to navigate developing world realities.
Yeah, I want to circle back to the economics, specifically the currency dynamic. Because earlier we discussed the massive upside of the guarani appreciating against the dollar.
Yeah, the 20% bumps.
But currencies swing both ways, right? The source explicitly warns about currency risk. If the guarani drops, couldn't those 15% returns just vanish instantly?
Oh, absolutely.
Like if your local investment makes 10% in guarani, but the guarani loses 15% of its value globally, you are actually losing purchasing power in real terms. That's the textbook definition of currency risk.
It is, and I totally agree with that pushback. The source highlights it as a primary con. You are making a trade-off.
Risk for reward.
Exactly. You're trading the nominal safety and stability of a U.S. Treasury bill or a Eurobond for the higher yield of a developing economy.
Right.
While the guarani has demonstrated remarkable resilience recently, driven by their conservative monetary policy and agricultural exports, it is fundamentally more susceptible to global macroeconomic shocks than a major reserve currency. The yield is the reward for taking on that exact volatility risk.
It is the inherent trade-off of the carry trade. You absorb the risk to capture the spread, and there's one final, very pointed warning in the text regarding the legal process itself. The source strongly cautions against navigating this ecosystem without a fully licensed, reputable immigration attorney.
Yes, and this is crucial. History shows that whenever a government introduces a highly attractive, fast-track program involving significant amounts of foreign capital, it inevitably creates a shadow industry.
Scammers and middlemen.
Exactly. The source warns that relying on unverified internet promoters, unregulated agents, or, cheap fixers to handle $200,000 investments and sensitive international legal documents is a massive vulnerability.
This sounds like a nightmare waiting to happen.
It is. The legal framework of the CIE is incredibly fast, but it's also rigid. A single mistake in the banking compliance or document authentication can freeze the entire process indefinitely.
So the takeaway there is verify your legal representation. Don't just click the first targeted social media ad offering a fast passport.
Please don't.
So, looking at the complete picture presented in our source material, the analysis identifies a very specific demographic that this policy is tailored for.
Who is it for?
Well, they point to remote workers, digital nomads, and globally minded retirees or investors who are explicitly looking for high-yield passive investments combined with the geopolitical insurance of a second residency.
It's a great fit for them.
Essentially, it's designed for someone who wants a low-maintenance South American Plan B without the physical obligation of entirely relocating their life there. So the question for you to consider is where you fit in. Are you chasing the yield, the security, or both?
It is a highly specific value proposition, but, analyzing this policy shift raises a much broader question that extends well beyond Paraguay's borders.
Ooh, what's that?
Well, the source points out you only need to visit Paraguay one single day every 3 years. But if we zoom out, as more global citizens start buying into countries purely as high-yield financial transactions, with absolutely zero physical presence or cultural integration required, what does the word residency even mean anymore?
That's a great question.
Right. Our nation's just becoming premium subscription services.
Wow, that is a genuinely fascinating concept to ponder. A sovereign nation transitioning into a premium subscription service. You make your capital deposit, you collect your annual yield, and you just keep your VIP FastPass in a drawer just in case you ever need to use it.
Exactly.
Well, thank you for exploring the complex mechanics of modern mobility and emerging market finance with us today. It is a rapidly shifting geopolitical landscape, and we will catch you on the next deep dive.
So now that you understand a little bit more about the Paraguay investor path, what do you think? Is this program potentially for you? If so, book a call with us at My Latin Life. There's a link in the description of this podcast episode where you can book a call with us. You can be speaking with us right away, and we can talk about the investor visa, golden visas around the world, and much more. I hope you enjoyed this new sort of experimental episode of the My Latin Life podcast. Just wanted to get the info out there about the new Paraguay Investor Pass. Please be sure to subscribe to the podcast, leave a review, and we'll see you in the next episode of the My Latin Life podcast. Ciao.